Welcome. In this video, XCN can go up 5230% and make a giant ATH. We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand.
When looking at long-term charts in the market, one of the most important elements that determine price movements are trend lines. The sloping progression of these trend lines clearly shows us how the price has moved over time. What we are facing right now is a rising curve structure. Such rising curves prove that buyers have been dominant in the market for a certain period, meaning the price has been gaining upward momentum and continues to move forward by forming higher lows at every pullback. The fact that the price is currently touching this curve actually points to a very critical stage, because as long as the price does not fall below this curve, the overall market trend is considered upward. In other words, the probability of a bounce from the rising curve is strong. Such a bounce creates a confidence-boosting outlook in the eyes of investors because, in technical analysis, reactions from trend lines are among the strongest signals for understanding which direction the market is likely to move. If the price bounces upward from here, it proves that buyers are still in control, that the declines are merely healthy corrections, and that the primary direction of the market remains upward. The price approaching this curve also carries strong psychological significance. A large portion of investors closely follow this level. Rising curve trends act like an invisible support, and each time the price reaches this line, strong buying pressure often pushes it upward again. This helps the market regain momentum. Looking at past movements, the price may have bounced from this curve multiple times, with each bounce followed by stronger rallies. Therefore, the current touch could be the sign of a similar scenario. That is, the price may bounce from the curve and begin a new impulsive upward wave. Such a move creates a big opportunity for short-term traders while also showing long-term investors that the trend remains intact. Because as long as a trend is not broken, trading against it, such as selling in a rising trend, always carries risk. This is why market participants are now focused on how the price reacts to this curve. Another factor that strengthens the probability of a bounce here is the dynamic nature of the market. Prices never move strictly upward or downward in a straight line. They always fluctuate with ups and downs. It is these types of rising curves that determine the general direction of those fluctuations. Contact with the rising curve can actually signal that the price has completed its natural correction and is preparing to move upward again. In such a case, as buyers step in, the price shows a rapid recovery and offers investors a new wave of growth. Especially when considering the emotional structure of the market, most investors see such strong trendline touches as a golden buying opportunity. The resulting intense demand makes the price spring upward like a tightly pulled bow. If the price truly bounces upward from this point, it may not only be a short-term recovery, it would actually be a strong signal that a major uptrend is continuing. Rising curve trends generally show that long-term buyers dominate the market. Every bounce from such a curve means a higher low, and every new low staying above the previous one shows that the market is steadily strengthening. This is a reassuring signal for medium and long-term investors. Especially those who trade based on technical analysis tend to increase their positions in such situations to prepare for the new upward wave. This collective action pushes the price even higher. Another important aspect of the current situation is the market's potential to gain momentum. If a bounce occurs, the price may move upward, not only in small steps, but with strong acceleration. Reactions from such curve touches increase investor confidence and bring a new wave of buyers into the market. The demand created by these buyers can cause the price to surge significantly in a short time. In other words, a bounce here would not only be technically significant, but also psychologically decisive for the market's direction. That's why the price currently touching this curve is such a valuable observation point in technical analysis. To break this down further, rising curves are essentially structures that connect the market's lows and show the general course of the price over time. As long as these curves are not broken, they act as support at every dip. They essentially serve as a balancing element in the market. Now that the price is touching this curve, it signals the most favorable time for buyers to step in, because buying from trend lines is often considered a low-risk but high-reward trade. If the price fails to bounce here and instead breaks downward, then we can understand that the trend has been broken. But the data we have currently shows the price is touching the curve at a point highly suitable for a bounce. This creates strong upward expectations. In such a scenario, if the bounce occurs, the price may start forming new highs. In market movements, upward trends often lead to more upward moves, just as downward trends lead to more declines. That means once the price bounces from the curve and begins an uptrend, it will not be just a single move. It will open the door for a series of consecutive gains. This increases investor appetite and draws more capital into the market. It's also important to note that large investors follow such trend lines very closely. For them, entering the market with big money becomes reliable only when strong trend structures are present. A touch of the rising curve provides this confidence. In conclusion, the current picture is very clear. The price has touched the rising curve, and the probability of bouncing upward from here is quite strong. If this bounce takes place, the market will experience not just a short-term recovery, but also a powerful upward wave. Such bounces are golden opportunities for investors, because they prove the trend is continuing. Therefore, as long as the rising curve remains unbroken, the market's direction will stay upward. This presents not only a reassuring, but also a highly profitable outlook. The point where the price is currently touching may actually be one of the most critical zones shaping the market's future. A bounce from here will please investors and once again prove the strength of the trend. But we cannot rely on the curve alone for analysis, so let's also take a look at other metrics. Stay tuned. The resistance zone at the top of the price chart actually represents one of the most critical concepts in technical analysis and is extremely important for investors in forecasting future price movements. The resistance zone is a level frequently encountered during upward price movements where sellers strongly step in and test the strength of buyers. At this level, it is possible to say that market participants are psychologically engaged, seeing from past experience that the price is likely to reverse from this point. However, as the price approaches the resistance point, each test weakens it, because every time the resistance level is tested, buyers gain more confidence while the selling pressure gradually breaks down. That's precisely why, once the price breaks through this resistance zone, a much stronger upward movement is expected to begin. When resistance is broken, it turns into a new support level, and there is no longer a major obstacle in front of the price's upward potential. The breakout of a resistance level carries not only technical, but also strong psychological significance. Breaking resistance signals to investors that the trend is strengthening and new momentum is forming. Especially when the breakout occurs with strong volume, the market's appetite for buying becomes very clear. Volume is one of the most important tools to measure the strength of a price movement, and in resistance breakouts, it shows that buyers are entering the market with great confidence. After such a breakout, further upward movement is not only a technical necessity, but also a reflection of investors' growing appetite and confidence. The importance of breaking a resistance level is not limited to short-term movements. It can signal the beginning of a long-term upward trend. This is because resistance zones are usually areas where the price has failed to rise above for a long time, retreating at every attempt. Therefore, when the price surpasses this area, many investors who had previously sold there or believed the level could not be broken may change their minds and switch to the buying side. This supports the sustainability of the rise. Such a psychological shift is one of the most valuable aspects of technical analysis, because when investors' perception changes, price behavior naturally changes as well. Breaking a resistance level is also critical for determining new targets. In technical analysis, when a resistance level is broken, the next resistance zone becomes the new target. In other words, the path ahead is opened, and investors begin tracking new potential price levels. During this process, market momentum grows stronger, since the removal of the previous barrier allows the price to move more freely. Just like a mass of water is waiting behind a gate that rushes out once it is opened, when resistance is broken, the price clears its path and gains fresh momentum. This momentum, combined with enthusiastic buying participation, allows the price to reach much higher levels. Beyond this, the effect of resistance breakouts on investor psychology can produce much longer-term results. Even investors who do not perform technical analysis often follow widely discussed and visible resistance levels in the market. As a result, when resistance is broken, not only technical analysts but also the broader market pays attention. This leads to the movement after the breakout being supported by a wider group of participants. Such broad participation strengthens the sustainability of the rally and allows the price to continue upward more steadily. A trend supported by the wider crowd is far stronger and much harder to break. One of the most important points to watch after a resistance breakout is whether the price retests that level. Often, the price pulls back to test the broken resistance as support. For investors, such pullbacks should not be seen as concerning, but rather reassuring. If the price gains strength from this test and moves upward again, it confirms the validity of the breakout. These retest moves boost investor confidence and allow much broader participation. Therefore, observing these retests is crucial to determine whether a breakout is sustainable. When the price breaks through resistance at the top, the overall trend structure can change fundamentally. A price that had been moving sideways or within a narrow range may enter a new upward trend after such a breakout. A change in trend direction also shifts investors' outlook. In sideways movements, short-term traders usually dominate, but in upward trending markets, long-term investors also become more interested. This is why resistance breakouts are signs of structural changes in the market, marking the start of a new era. The excitement created by a breakout spreads like a chain reaction, pushing the price even higher. Many investors see the breakout as confirmation and act on the idea that the trend is now upward. This perception can accelerate the price increase. At the same time, short sellers, those betting on a decline, are forced to close their positions when resistance is broken, creating what is called a short squeeze, which drives the price even higher. In other words, a resistance breakout is a situation where not only buyers but also sellers push the price upward. In conclusion, the breakout of the resistance zone at the top of the price chart represents a major shift in technical, psychological, and structural terms. Such a breakout removes barriers in front of the price and paves the way for a new upward phase. It boosts buyers' confidence, breaks sellers' pressure, strengthens market momentum, and attracts broader participation. Breakouts supported by strong volume in particular indicate that prices may open the door to much longer-term uptrends. For investors, these breakouts create great opportunities because the trend direction becomes more clear. At this point, the probability of further upward movement is much higher, giving investors a greater chance to benefit from it. Therefore, resistance breakouts are one of the strongest signals in the market, and once they occur, an upward move becomes almost inevitable.
The formation of an ascending channel is one of the most important structures investors pay attention to in technical analysis. This channel pattern indicates that the price is moving within a certain trend line and that this movement continues consistently. The lower band of the ascending channel is considered the support level, while the upper band functions as the resistance level. Within this channel, the price fluctuates regularly, at times approaching the lower band, gathering strength to move upward, and at times nearing the upper band, where it faces selling pressure and pulls back slightly. The continuity of these movements shows that there is a balance between buyers and sellers, and that the price continues to remain within the trend. However, the most critical part is the possibility of the price reaching the upper band of the channel and breaking it. Breaking through the upper band does not only mean surpassing an ordinary resistance level, it also means moving beyond the limits of the channel and starting a new, stronger upward trend. As mentioned here, if the price reaches the upper band and successfully breaks through it, an extraordinary potential increase of about 5,230% could occur. Behind such a massive upward potential are not only technical factors, but also psychological and market dynamics. In the eyes of investors, the upper band of the ascending channel acts like a ceiling. If it has been tested multiple times but never broken, surpassing it generates a much stronger wave of confidence. This situation shows that sellers have lost their strength while buyers have completely taken control. When this breakout happens, new investors rush into the market, while those who previously hesitated or don't want to miss the rally also begin to buy. This chain reaction accelerates the price movement, opening the door to the anticipated 5,230% increase. In addition, such a breakout in a channel structure is usually accompanied by a surge in trading volume. Increased volume is one of the most important signs that the upward move is genuine and sustainable, because it's not just about the price rising, but also about strong buying demand supporting the move. When these two factors combine, the price often continues upward more sharply and for a longer period. The journey of the price toward the upper band within the ascending channel is also a test of patience for investors. During the channel movement, the price may pull back several times, touching the lower band before climbing again. This process eliminates impatient investors and leaves behind stronger hands in the market. By the time the price reaches the upper band, a more solid and determined group of buyers remains. The confidence created by these investors makes the breakout easier to achieve. Another important factor is that in technical analysis, channel breakouts often lead to very sharp and sudden price surges. Because there is a resistance line that has been suppressing the price for a long time, and when this pressure is finally broken, the price movement is released like a stretched spring. This release manifests itself as a very rapid upward acceleration. A colossal increase of around 5,230% can emerge as the natural result of this momentum. In such a scenario, overcoming psychological resistance levels also becomes very important. For example, after breaking the upper band of the channel, the price may encounter certain round numbers or levels that were important turning points in the past. Normally, these could act as new resistance levels, but in the case of a strong channel breakout, the price surpasses these levels much more easily. Because investor expectations have now clearly shifted to the upside, market sentiment becomes the downtrend is over, a new era has begun. This further strengthens the continuation of the rally. Especially in highly volatile markets such as crypto, such a channel breakout can cause prices to increase dozens or even hundreds of times in a short period. Although a 5,230% increase may initially seem exaggerated, similar examples have occurred in such markets in the past. There are also other factors supporting the price's movement toward the upper band. For instance, each time the lower band of the ascending channel is tested, the price reacts strongly upward, showing the determination of buyers. This indicates that sellers are becoming less effective and buyers are moving with stronger footing. Additionally, if there's a steady increase in trading volume throughout the trend, it further proves that more buyers are entering the market. Another crucial point is that such massive increases usually reward long-term investors, because those who ignore short-term fluctuations and patiently hold their positions face the greatest returns when the price advances toward the upper band and eventually breaks out. At this stage, long-term strategists gain much more than short-term speculators. A colossal increase like 5,230% is the result of patience and strategic positioning. The price's approach to the upper band acts almost like a signal because investors know that each approach is a rehearsal for a major breakout. And one day, when that upper band can no longer hold and finally breaks, an entirely new bullish story begins. In conclusion, the presence of an ascending channel brings stability and predictability to the market, while the price's movement toward the upper band acts as a flare signaling an approaching major breakout. If the price reaches the upper band and breaks it with strong volume, the likelihood of a 5,230% increase becomes highly significant. This is not only a technical expectation, but also the natural result of investor psychology, market dynamics, and the balance of supply and demand. Correctly reading such formations plays a critical role for investors in achieving both short-term gains and capturing major long-term opportunities. Such a channel breakout announces the beginning of a new era in the market and paves the way for the price to reach much higher levels.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.